You have been a gold bull. Are you still?
Well, we're still worried about the near term and the volatility. It feels a bit like what happened in April, where we had the triple whammy from the Fed, China having slower growth, and then Cyprus talking about selling from the central bank to shore up their problem. This time it's only a Texas two-step. It's China came in overnight. The Fed yesterday, some people woke up for some reason they didn't know the Fed was going to be tapering, and they started selling into that. And then overnight with China talking about slower growth because of the PMI number, those added up to what has been a $70 sell-off in the last 24 hours.
How much do you think downside is left, Dan? How much more QE premium do you think is in there?
It's hard to know. Near term probably still has some window dressing for the end of the quarter, as some portfolio managers aren't going to want to justify their gold position. So that could lead to further selling over the next week. Downside, the 1200 is going to get pressure on the gold miners themselves. Probably start seeing some production cutting in the third quarter if it holds there. So you have that downside protection. And in the near term, anything can happen with commodity prices. Small marginal shifts in moves can have big dramatic shifts in the pricing.
All right, so you made a good case for sort of being negative in the short term, but what about the longer term? Are you still a bull?
Yeah, longer term we are still bullish on it. We think it plays a role in portfolios because of diversification. We still have global currency debasement. Japan's doing what they're doing. We're printing money here. Europe's printing money like crazy. So we still have that case. It takes a while maybe for those inflation factors to kick in, but this global currency debasement should be supported for gold prices longer term. We also think that what's interesting is what's taking place in the gold mining companies. They are cutting costs. They are getting help from lower currencies in Canada and Australia and South Africa. So maybe that makes a good case for the gold mining companies in the third quarter as well.
And what kind of gold mining companies do you like? Because you could argue the explorers would be really susceptible to more downside in the commodities, but then you have the big gold miners, which are just having problems growing. What do you like?
You have to think that the seniors and intermediates are better positioned here, the ones that have the financial wherewithal to withstand the volatility here. While the exploration companies and the developers are probably attractive price-wise, they still have a lot of risk because they need to raise a lot of capital. So you're better off in probably the upper end of the spectrum.
And you mentioned perhaps getting into...
Goldcorp's probably one of our favorites.
Goldcorp, you said, was one of your favorites. And you mentioned perhaps getting into gold on the downside. What's your target then to start nibbling here?
I think you have to figure out what your position should be in your portfolio in terms of diversification. You should have some exposure to it, and then adding to it on the downsides. We'd typically say 3 to 5% in your portfolio is where you should be, and any of these big moves adding to it on the downside.